And we're live. Hey everyone, it's Brian with Tiny Crypto Blog. Hope you're doing well. If you happen to jump over from Keith at Crypto Coin Mindset, welcome. So this one's kind of a last minute thing. It's pretty late, 9:26 Central Time. And bear with me, I have some computer settings here, so I don't want my computer to crash. Got to do some mitigation where my main hard drive's starting to get filled up and I'm going to have to migrate it over. So that'll be a process. But anyway, sticking to the point. Welcome. Hope your week was good. Hope you're doing well. This week, let's get our ticker going. Bam. So yeah, late start. And it's just weird because this is I almost didn't do this stream, but I figured, I might as well give it a shot. It's almost like the feel of things lately has been, we've had that big buildup with the Bitcoin ETFs. And then now it seems like, okay, we've reached this new plateau point. And it feels almost like it did prior to 2020, where I remember at the time for myself, things with the cryptos, it was still in the bear market. And I was kind of in between at a point in my life where I was trying to figure out what I wanted to do. I left the position with the prior company. And it's like, okay, this is the first time in 11 years I've actually had some time off to kind of reflect and figure out what do I want to do. And I was started with a history channel. If you're a history person, the Chronicler's Tale. It's out there on YouTube, BitChute, Brighteon, and Odyssey. And I got started with that. And my focus was there because things were so quiet in the crypto space. But then 2020 happened, and then 2021 happened, and then boom, smack in the middle of it all over again. And I feel like I'd been there since. End up finding regular full-time work, and then here I am. But I feel like that's almost where we are today. We've reached that plateau point, and there's news. And like with price action, which I'll get to in a moment, it's happening and prices are going up. I mean, we crossed 50,000 the other day for the first time in a long time. Not since the Terra Luna days have we been in this range. Terra Luna, when that started falling apart, have we been in this range? And it just feels like things are quiet, and it's almost not, there's not a lot of news to talk about. So let's get to that price. All right, zoom that one out. Bitcoin. We push this out last year. Let's stretch it out. Last time we were at 50. 2021. Unbelievable. Man, it has been a year and a half. No, it's been more than 2 years since we've been at that point. And for anyone who made it through this bear market, congratulations. You are a veteran now. And if you've been through more than one bear market, congratulations. What did you do different this time? Bear markets, if you are a person who is looking to accumulate cryptocurrency assets as a means of building wealth, bear markets are wonderful times, because that dollar, especially if you do dollar cost averaging, that dollar is going to keep buying you more and more. I think about myself and how in the 18 bull market, or bear market, excuse me, the app that Keith, the Crypto Coin Mindset, likes using a lot, Lolly, that had just started up, I think in late 17. And I got to tell you, I made some great stacks on rebates with that. Back when Bitcoin was going for $5,000 to $7,000 each. Oh boy, you could get a lot of sats per dollar. And it was the same with this bear market. Back when we were down in the in the low 20s and even in the teens, great time for stacking. But the overall market, I mean, It's up. It's definitely up. There was a lot of optimism and exuberance. Uh, and some of this is driven by stablecoins. Because some of this is driven just speculation. Some of it's just the buying pressures that are now becoming more prevalent in the marketplace. Because I think with the Bitcoin ETFs, I saw a headline, I think it was this week, that I don't know if it was all the US ETFs or just the top two or three, is almost equal to what MicroStrategy owns. And MicroStrategy, the company owned by or founded by Michael Saylor, they continued purchasing more Bitcoin, and they're almost up to having 1%. I can't remember if it's the total supply or the total issued, but that's a lot of Bitcoin. And if Bitcoin goes to where it could potentially go, good God, they're going to be richer than Jesus. I don't know of any other exclamations I could use to describe the amount of wealth and value that much Bitcoin would have. It's crazy. But yeah, this is definitely bull market time. There are some protocols that had less than exciting weeks. Some of them pumped more than others. But we're seeing a lot of players come into the scene. And one thing, for Bull Market Survival Guide, don't FOMO. Don't FOMO in. If you start experiencing emotions, especially if you're new, if you start experiencing emotions where you feel like you have to get into, this coin's going up and you have to get in, just remember, regardless of what the price level is, there's still years and multiple cycles that this has to go through before we're at a point where you've truly missed out. Now, obviously, the sooner you jump into something, the more gains you're going to get in a longer term road. But if you were someone who bought Microsoft stock pre-adjusted for splits back in the old days, when before all the splits, it would go for $10 or $16. I mean, that's a huge difference right there. If it goes from 10 to 16, like, oh my God, it's pumped more than 50%. Have I missed out? Obviously not. You're getting price margin or price bases is definitely different, but the overall where you got in on a very long-standing train, you didn't miss out. And the crazy thing is, someone pointed out in a podcast recently that for a lot of companies like Amazon, it wasn't until the last decade that Amazon got the stock and the valuation and the company got as big as it is. A lot of tech companies didn't really explode and take off and grow in size and scale and subsequent market capitalization. It wasn't until the last 10 years, but these are companies, especially Amazon and Microsoft, those have been around for 30 and 40 years. 30 and 40 years. Well, Amazon almost 30. But think about that. 30 years ago, it was 25 years ago that Amazon stock was first out there. That Amazon was out there as a company. 25 years. And now look where it's at. And Bitcoin is only 14 years old. And the adoption is less than 5% globally, even if you consider that. Plus, if you consider that if you go by addresses, that a Bitcoin and one individual's Bitcoin wallet can create new addresses for multiple transactions going into the same wallet. And you were just going by that metric. We're still so early. But with the Bitcoin ETFs, there was a What Bitcoin Did podcast, and I shared it on TinyCryptoBlog. Let's bring it up for everyone. where he did a podcast with Harry Sudak, who is Sudak, who is a miner. And if you're looking for voices in the space, Harry is a very level-headed person. Of all the people I've listened to over the years, he's got a very level-headed perspective, and it's a good voice to have, good voice to follow. But they talked about, okay, we've reached this point of Bitcoin is no longer just the speculative play money. Now we have ETFs. We've seemed to have reached a point of legitimacy and acceptance. And now the question is, what next? And they went into it. It was like almost a 2-hour interview. They went into that, and it was definitely worthwhile, worth checking out. So where are we at? We already did price action. That was now. We're a step behind the ball here. Oh, I'll create a new banner for this one. No, we're good. Bull market. Yeah, don't FOMO in. We still got time. We're still good. You're not going to miss out on anything. Even now, when we've come up from these levels, if you have a good perspective, if you've been through this, especially if you've been through this, if you're a veteran of these cycles and everything that you experience with the range of emotions, if you've done your homework and you've done your research, you'll know that you'll be fine. There's I've often said that there's a proverb that applies to get into investing, and that is the best time to plant a tree is 15 years ago. The second best time is today. So even if you didn't get in when Bitcoin was below 10,000, you didn't get in 2020, you didn't get in this bear market, that's okay. There's still ways to go. You'll be fine. I guess that'll take things right into where the open mic part, which is, I guess, my time, where it's, the things that stand out. And this week, actually, Keith, CryptoCoin Mindset, he did a video. Let's pop that one up on the screen. He did a video, Legacy versus Crypto, who's eating who? And he played clips from a Charles Hoskinson video. Let's pop that over here, where he's talking about legacy eating crypto and the things that Charles went into. And I don't want to rehash a lot of stuff because I think Keith did a good job. You have to go on, I think, about 20 odd minutes before going through the recaps he gets to it. But some of the things that he brought up, Charles Hoskinson, and also in this great What Bitcoin Did interview, let's see if I can get a thumbnail. Peter McCormick, Whitney Webb, who she's done a lot of interviews that I've picked up over the last few years. And her thing is doing research into the interconnectivity of the players in, I guess you could say, the elite class, the political class, the money class, the powers that be, the Davos crowd, the WEF crowd, whatever you want to refer to them as. The things that the people who wield the levers of power, responsibility, governance, and control, and finance and money in our world today, and those who curry favor with them, and the things that they keep hidden in the shadows. She connects a lot of that. And Mark Goodwin, he is the editor of Bitcoin Magazine. And they also sort of took a long-form view in this video of what Charles was getting to, which is, now that you have institutions, and this also, I got a possible theory about Gary Gensler. I'm going to make a short, or I've got a short. I just need to edit and publish, but I'm going to keep this as my reminder. So now that you have large-scale institutional money involved in Bitcoin via ETFs, they are buying ETFs. Have we let the wolf into the henhouse? We've definitely, there's numerous pros and cons. You could say, well, this is what adoption looks like. When Bitcoin eats the world, as Bitcoin eats the world, its energy expands into more and more and more sectors and nooks and crannies of human society and interaction. And it's natural that this was going to happen at some point. You would have derivative instruments that track the price. Well, in these financial institutions holding Bitcoin, one of the risks is that maybe one day, just as we saw with, say, BlackRock creating the whole ESG game and standards, which led to an entire sector of society, the corporate world, jumping into line. I mean, look what ESG has done. You had people in corporations, people in governments, private education, all of them jumping all over this. And where are we at? Yeah, ESG turns out to be a crock of crap. It's not pragmatic. It's ideological. It was an idea that was worth exploring. We've explored it. Most of the stuff doesn't work. Well, you have those same parties that can create that sort of effect. What could they do with the cryptocurrency space? Could they, through owning all these tokens, say, hey, we want to make a fork of Bitcoin, but it's going to have some different characteristics to it? As Charles points out, what could they do? They create this coin. They dump the billions of dollars of Bitcoin that they own in their funds. All of a sudden, their coin makes more economic sense to mine than legacy Bitcoin. Miners go over, and what do you know? It's got all this, it's got all the same practical characteristics that you can use for the Lightning Network. Well, then the miners, they move over to this new Bitcoin. Institutions, they purchase this new Bitcoin that they've created and gave to themselves. And legacy Bitcoin, with its decentralized characteristics, which make it what it is and give it its value proposition, all of a sudden, those things are out the door. That is a risk. And that was one of the things that Charles pointed out. And he also lashed at people who ignore the potential of these threats. I mean, it's definitely something to have on your radar. And when I'm personally facing situations like, okay, this is a legitimate concern and something we need to think about. One thing I remember that keeps me from worrying too much, that helps mitigate some of the levels of concern, was U.S. President Calvin Coolidge in the I think it was quoted in the 1920s, where he said, paraphrasing this sort of, when you see 10 problems coming down the road, 9 of those are going to fall into the gutter before they even come close to you. Things that are potential threats don't end up playing out. Are they possible? Yes. Are they probable? They're low. But this is a risk factor. And if we've learned anything from the onset of the last bear market cycle, especially with all the companies that are involved in the space, third party risk is something we must be mindful of. The Celsiuses, the BlockFis, the FTXs, the Terra Lunas, the Three Arrows Capital, the Voyager Digital, all that. We need to be mindful of these risks. But in this case, it's a co-opting of Bitcoin. If it's Bitcoin, if you have ETFs for Ethereum, what's to say that all of a sudden there's not a fork of Ethereum? Or what's to say that some other protocol before it even goes to in a level of an ETF or having derivatives created against it could be used to co-op? I mean, for all we know, we could have the big money go in and influence things with Hedera Hashgraph. I mean, it's essentially corporate coin, not in a bad way, since its adoption channel is through corporation use and research and development and collaboration. But what's to say that a lot of these are public companies, and BlackRock, just like Barclays Bank prior to 2008, would be in the top 5 or 10 holdings of just like every single company. BlackRock's in a similar position where there's a certain degree of influence where even if they're not talking into people's ears, the financial risks of alienating or encouraging behavior on BlackRock's behalf, that's something to consider as well. That's a risk factor. So, yeah, that's pretty much it. There wasn't not too much this week. It's all kind of quiet stuff. I'm trying to think if there's any other news. Oh, if you happen to use the Fold app, which is a great app to use, I'm going to bring this up because I love the Fold app. I got this back in 2020. And it worked because with all the buying from home that we were doing, let's pop this up. The Fold app is great. Do they have an about here? I don't care about the team. So with the Fold app, they have just the app, and they also have a debit card. And the way it works, it's basically a lot like Lolly. This would probably help. The way it works, go to the homepage. There we go. Fold app and the Fold debit card. And what's great is that it's just like Lolly where you earn rebates paid in Bitcoin. And I believe they use Fortress as their custodian company. Let's get ourselves a banner. There we go, Fold app. And you would be able to get gift cards for different stores, everything from Amazon, which I'd never seen Amazon gift cards with rebates anywhere. So for me, there's like, okay, sole source, awesome. Numerous vendors. I'm going to bring it up on my phone while we're looking. Numerous vendors. Domino's Pizza, I think. Bear with me here. Gift cards. $1-800-Flowers, Ace Hardware, AMC. Oh, they got AutoZone now. Bass Pro Shops, Burger King, Chipotle, Grubhub, H&M, Home Depot, IKEA, Instacart, Jersey Mike's, Jiffy Lube, Krispy Kreme Donuts, The Lightning Store, Lowe's, Macy's, Michael's, all the sports shop, Old Navy. It goes on and on. The team behind this has done a lot over the years to add more features and develop. And one of their big features was having the spin wheel, where before, when you make a purchase, you would get a spin based on the dollars that you spent, and you could get anywhere from a few extra sats to an extra percentage point of rebate. So if you were buying a gift card that had 3% rebate, you can get a 3.5%, an extra 0.5% stacked on top of it. Well, then they introduced the debit card, and the debit card, when it started out, the incentive was you would get rebates on all your purchases. So you could go to Trader Joe's, you could go to Target, you could go to Walgreens, you could go make a transaction and pay with your debit card at the post office for stamps, and you would earn rebates in Bitcoin. Well, then they introduced a program called, let's bring this, the compare plans, the Spin Plus. Also, another plus was that you could, if you bought a gift card and you paid with your prepaid, your debit card account, you'd get extra percentage rebate on that gift card. Well, you can close that and open up this tab. With the Spin Plus, you get extra rewards. You get there are certain offers that, like for example, Uber Eats, Uber, Home Depot. I'm looking at this. These are Spin Plus exclusives where you need the Spin Plus membership, and only costs, they say unlimited cash back. Plus you get certain categories where they've got category boosts, restaurants and bars, travel, digital meeting games, rideshare and taxis, bill pay if you use bill pay. They also have vendors, Walmart, Lyft, Wingstop, Circle K, Dick's Sporting Goods, Kohl's. Yeah, that's nice. 3% back. Crate and Barrel. Wow. TurboTax. And for $10.99 a month, or though you can also pay 1 year at a time and get a little bit cheaper, you would get all these extra features. You also, Spin Plus. They also implemented a feature where through Fortress, you can stack your Bitcoin and do dollar cost averaging, making a buy every day, every week, and do a stack through that where you fund your debit card from your bank, and then that's used to buy Bitcoin. And then in the last week or so, they have a new live off your Bitcoin, where what you can do is you can take the Bitcoin that you have either from what you've purchased, or I believe what you have from your accumulated rewards, and turn that into, be able to spend that like you would with, I think it's BitGo, where you can do that and buy like gift cards for, buying the gift cards. I don't think you can do like a straight on Visa gift card, but you can use it for buying your bit cards and essentially live off of crypto, where you just take whatever crypto you've got, put it into your debit card, put in your if you've got the whole account thing set up with Fortress, move your Bitcoin into there and use that to fund purchases of your gift card. So, I mean, they're always looking to do this, but I had to drop it because they still have some glitches with so for example, like the category boost, where there's a 1.5 with Visa, it's Visa signature transactions. Well, I'd be going to a restaurant and all of a sudden it's like, I just spent $50 buying dinner for the fam. And it was classified as non-signature. So that was completely wasted. I could have just used my Chase card or my whatever bank card it would be, and gotten at least 1% out of that, or any other bonuses. So, go figure. So yeah, I'm taking a breather and just buying gift cards, which for the stores that matter, I'm able to get access to in the places I go to. But Fold Card, great way to stack, especially if you're using it for bill pay, you're using it. And if you're accumulating more Bitcoin, I mean, for me, it was a case of the Bitcoin I was earning didn't add to $10.99, even if I consider down the road type of things. It just wasn't working. So, but I do have an affiliate link, which I think you will get either 5,000 sats or $5 credited to your account. I've got that in the show notes. But yes, that wraps things up. There's really not much going on. I will note, though, with prices, that we are. Oh, this was a fun one. And after this, I'm really going to call it quits for real. Where we are in the price of Bitcoin today. So here we are at 52. If you go back just in the last 2 months, the low was 38. I'll do some calculation here. 52 minus 38 equals 14,000. 14,000. 14,000 plus 52 is 66, which is just a hair shy of the all-time high. We are that close to the all-time high. And look how little news there is. No one's talking about it. We're going to pass the all-time high, and I imagine the noise isn't going to be that much louder. The Bitcoiners and people in the digital social media spaces will be making some out of it. We'll have the CNBCs and everything, but otherwise, it's once we make it past the all-time high and stay above the all-time high for an extended period, we're probably going to more people take notice. And I think it's when the conversation starts going to that has in the same sentence Bitcoin and 100,000, because that's a new number, a new target, and that's going to generate the FOMO. So once we pass the all-time high, the current all-time high, that's when you want to listen and go, okay, that's when things might start to get interesting and the FOMO of the cycle might really start to kick in. So, wrapping up, thank you for tuning in. You can follow Tiny Crypto Blog at TinyCryptoBlog.com, where I will post the weekly summaries. You get your view of the headlines from 10,000 feet. Any good videos from the week I come across that have information worth sharing. And any video posts during the week where if there's something worth sharing and, getting that high level perspective and seeing what's going on, you'll see it there. You can also follow along on YouTube, BitChute, Odyssey, Brighteon, and what's the Spotify, as well as numerous other cross-channel podcast platforms. They're all in the show notes. So they're there. And with that, I'm going to wrap up and say, be well, everyone. Talk to you soon. Have a good weekend. See you next week. And we are done.